Welcome to this explainer. Look, if you're a taxpayer in India, the ground beneath your feet literally just shifted. Sweeping banking and tax changes for April 2026 have officially kicked in, and they are fundamentally rewriting the rules of how you save, spend, and file your taxes. So today, we're going to break down these complex new regulations into a simple, actionable guide that directly impacts your wallet. The goal here is pretty simple. We want to keep you compliant, protected, and entirely in control of your hard-earned money. Let's get right into it.
Here is our roadmap for today. We'll be covering the Budget 2026 tax impact, the digital fraud and RBI safety net, saying goodbye to Form 15G and welcoming Form 21, and wrapping up with a 7-point financial survival checklist.
Section 1. Budget 2026 Tax Impact. We'll be navigating new TCS rates, return deadlines, and asset disclosures.
Okay, forget the old rules, because under the brand new Income Tax Act 2025, your upfront cash flows have dramatically shifted. Take a look at this sharp drop in a tax collected at source, or TCS. If you're sending money abroad for your kids' education, paying for overseas medical treatment under the liberalized remittance scheme, or just booking an international tour package, those old tiered rates of 5 to 20%, they are gone. It's now a flat 2% rate across the board. This is a massive win because it instantly leaves more cash in your pocket up front, rather than having it temporarily locked away with the tax department.
Now let's talk about making mistakes. We are all human, right? You file your return and a month later you realize, oops, I completely forgot some income. Well, Budget 2026 actually gives you a pretty major lifeline here. The revised return deadline has been extended all the way from December 31st to March 31st of the following tax year. But a quick word of warning, this is definitely not a free pass to be sloppy. If you file late, a fee of 1,000 rupees to 5,000 rupees is still going to apply.
Also tucked away in Budget 2026 is a critical window for anyone holding foreign assets. Say you worked abroad a few years ago and just left a tiny bank account open, or maybe you hold a few foreign shares. Do not ignore them just because the amount seems small. The government has rolled out a one-time 6-month foreign asset disclosure scheme specifically for certain small taxpayers. Keep in mind, this is a strict statutory scheme, not some universal free-for-all amnesty. You absolutely must proactively disclose these overseas accounts right now if you meet the conditions.
Moving to Section 2, Digital Fraud and the RBI Safety Net. Let's look at the new Digital Fraud Compensation Framework. So let's address a daily banking terror for a lot of us, digital fraud, and exactly how the Reserve Bank of India is stepping up to protect your account. You've probably seen those viral WhatsApp forwards claiming the RBI is just unconditionally handing out $25,000 to anyone who gets scammed. Okay, ignore that, it's a myth. Let's set the record straight. The RBI is not just giving away 25 grand. What this actually is a strict maximum cap, or 85% of your net loss, whichever is lower. And this applies to certain fraudulent electronic banking losses up to $50,000. Oh, and you can only claim this specific benefit once in your entire lifetime. The absolute most crucial point here is that to qualify for this compensation framework, which goes live on January 1, 2027, timing is literally everything. You have a strict 5-calendar-day window to report the fraud through 3 very specific channels. First, notify your bank. Second, log it on the National Cybercrime Reporting Portal. And third, dial 1930. Do not just wait around hoping the money magically bounces back the next day. You need to act immediately and preserve every single screenshot.
Section 3. Goodbye Forms 15G and 15H, and welcome Form No 121, the new digital trail for nil TDS.
If you are a senior citizen or an investor who relies on interest income, you really need to lean in and pay attention to this one. A massive piece of compliance paperwork has just been totally overhauled by the Income Tax Rules 2026. Forms 15G and 15H, they are officially dead. If you've been relying on these for years to prevent tax deduction at source, throw them out. To avoid unnecessary TDS on your interest and dividends now, you have to declare your nil tax liability using the brand new Form 12A1, which falls under Section 393 and Rule 211. Do not, whatever you do, just download last year's form. It won't work anymore.
And here is a huge misconception that traps people all the time, thinking that filing this form with your primary bank covers you everywhere. No way. It absolutely does not. You can't just submit this thing once. You have to proactively hand over Form 12-1 to every single bank, cooperative, and company paying you dividends or interest. And you really need to get this done right at the beginning of the tax year, well before that income actually hits your account.
Why the big change? Well, it brilliantly illustrates how incredibly technology-driven the new tax system is becoming. See, when you submit Form 121, the payer generates a 26-character Unique Identification Number, or UIN. This creates a rock-solid, traceable digital audit trail that links you and the payer directly to the income tax department. Gone are the days of paper forms getting lost in some manager's desk drawer. Everything is instant, fully verifiable, and completely interconnected. Finally, Section 4, our 7-point financial survival checklist. What you absolutely must do today.
Grab a pen or take a screenshot, because this is your blueprint for surviving the year ahead. Point 1, you've got to know which laws actually apply to you. The new Income Tax Act 2025 governs tax years beginning from April 1, 2026. That 65-year-old 1961 Act is officially in the rearview mirror for new income. This is a game changer for how you approach your personal tax planning, the section codes you reference, and the forms you use.
Point 2, make sure your financial story adds up. Because reporting systems are so highly interconnected now through the Statement of Financial Transactions, every large bank deposit, especially cash deposits or credit card payments over 10 lakh rupees, needs to have a crystal clear, documentable source. And that source has to align perfectly with exactly what you're reporting on your tax return. Point 3, don't just sit around waiting for tax season to figure out where your money went. Actively track your tax credits all year long. Keep an eye on those lower TCS rates we discussed earlier, and make absolutely sure your new Form 121 declarations are filed on time with every institution. You really don't want to deal with frustrating cash flow blockages just because of a missed form.
Point 4. If a fraudulent debit does happen, do not panic, but you must act instantly. Preserve all the evidence. Take screenshots of everything and hit that strict 5 calendar day reporting window through your bank and the cybercrime portals. Delaying even a couple of days could literally cost you your shot at that RBI safety net and the 25,000 rupees maximum compensation.
Point 5, you need to become a meticulous record keeper. Seriously, whether you sold a property, got a big gift, or remitted money for your kids' overseas education, save every single agreement, receipt, and remittance document. We are in 2026 now. A dusty shoebox full of faded receipts just isn't going to cut it anymore. A clean, undeniable, digital paper trail is your absolute best defense against the tax notice.
Point 6. Review all your overseas financial interests and do it right now. Make sure they are reported properly, taking full advantage of the Budget 2026 6-month disclosure scheme if you meet the conditions. Honestly, don't just assume the tax department won't find out about that small foreign account. Global banking data is shared way more freely now than it ever has been before.
And this brings us to point 7, which might just be the most important one. Always verify financial rumors. Please do not make sudden moves with your life savings because of some panic-inducing post on social media. Always cross-reference these claims through official CBDT or RBI channels. Understand the rules, document your transaction, and verify the information yourself. So, I'll leave you with this. The financial landscape of 2026 is totally different. It's completely digitized and incredibly regulated. Are you going to be caught off guard by these changing rules, or are you going to adapt and use them to your advantage? The choice is entirely up to you. Apply this understand, document, verify framework to protect your hard-earned wealth. Let us know down in the comments which of these massive 2026 changes impacts you the most, and we will see you in the next